Oh man, so another red day for Bitcoin. Now we're entering back into the pattern we wanted to avoid at all costs, but this was something we had predicted over 5-6 days ago. Guys, smash on the like button. Don't forget to subscribe. We're going to go into some of the key levels here now on the second day of this huge week. Today we get some serious earnings. Even before the bell, we get the likes of UPS, Coca-Cola, GM, McDonald's, and then after the bell today on Tuesday, Alphabet, Microsoft, Visa, and also do not forget, guys, today the FOMC are sitting down and they are talking. We have a whole bunch of updates. We've got some updates on the European markets, which have obviously opened up already here where I am in London, not reacting well to a certain bit of news. Got to bring all of this to you guys in a timely update, which is why I'm here a little bit earlier today. Now, as you're seeing, guys, we were here. We got the breakout of this bear flag. This is the bit that everybody was getting excited about. And now you could see the head and shoulders pattern, if I zoom into the 4-hourly, played out exactly as we predicted here. And we got the breakdown. I set the price target at 20,500. We're now sitting at 21,000, almost flat. We may get that little bit down to 20,500 and hit our price target perfectly. Congratulations to you guys who traded that. For those of you who don't get these alerts, you need to be in either our Discord or Telegram. Both are completely free. Jump into those and make sure you're getting involved, because sometimes when I don't have time to make a video, I just drop a quick chart update in there for you guys to make sure you know what is going on around the clock. Now, what does this mean? Well, we're back in our bear flag, right? And the bear flag continues to be the bear's control. So if I remind you guys, when everybody was getting euphoric on this little moment here, when we didn't even break 24,000, what did I say time and time again? I said I was prepared to trade long this rally if and when we're able to get a clear close above 24,000 on the daily. We were unable to get that daily close above 24,000. The bears came in and pushed us back below our EMA ribbon. If I show you that, if I bring this out here on the daily, bring out the EMA ribbon, you will see exactly, and it's never any coincidence, guys. These levels are not coincidence at all that you get rejected here exactly at 24,000. By those bears. Okay, you can see that right there on this candlestick. We pushed above our EMA ribbon and we got sent back down below. And now look, it's no coincidence that this is what's happening. We're just getting rejected by our EMA ribbon, which is what I was warning about all along. So what is our hope? Well, there is a little bit of hope before I come onto the bear flag, because the bear flag suggests, look guys, you're going to head back to the bottom of the channel and potentially break down to lower price targets, right? If I show you the channel here, you will see here that on this bear channel, you've got the two lines. Let's just bring that back right here so you guys can see it. We've broken into this channel and you can see that the bottom of the channel is back down at that 18,700 level. Now, we're not going to head there immediately. I'm not suggesting that's the case, but we're back into the formation of the bears, which is not great because this whole pattern is designed to send you lower, right? I've shown you this, guys, before. I've shown you here in this type of chart here where I've shown you that leading up to the FOMC meeting, then you get a big dump. Consolidation, big dump. Consolidation. The difference was we had this little breakout getting us excited and rightfully so a little bit, but you didn't want to get too carried away that we're going to suddenly run up to 30,000. And now we got that calling back off and we're technically back into this channel now, even though we've broken the long-term trend from this down green line. So the question is, are we now going to have that dump now? This white line is to the FOMC meeting where they convene today and the decision comes tomorrow. Or are we going to see this happen over the next few days? And that's what we need to watch out for. And that is why I'm sitting neutral right now and allowing the data to come to me. I'm not chasing this data. I'm not taking any degen trades right now in a bear market like this where access to liquidity is so short. It doesn't make any sense. It's all about preservation right now and preserving your capital. Even if you miss a couple of percent on a trade, you're okay. You can live to fight another day. Now, if you're trading with a little bit of coffee money or lunch money, that's perfectly fine. That's what I do. I play around with a small bit of my portfolio and the rest is sitting there in my long-term strategy, which does not get affected. Now, as you can see here, of this bear flag, the only way we can get out here is if we create these higher lows. If we can rotate here somewhere, if maybe it can pick up support at 20,000, we know that's a key psychological level. Can it pick up some support and go post a higher high? That's the important bit. Once you get the higher low, which is higher than this low here and this low here, you need to see it go ahead and post that higher high above 24. And that's going to be the tricky bit right now. And it's going to need the wind behind its tails to say, okay, we've got some good news coming out. But what is that good news? Are we going to get good companies' earnings? Are we going to have good projections in those earnings? Does the Fed go easy with the 75 basis point hike and maybe even talks about a pause in September? These are the kind of things we need to start to see a serious rally. If we just have 75 basis points, the market's not going to get too excited. The market's going to need 75 basis points and talk of perhaps pausing, maybe because of fears of recession or things like this. And we see good earnings from companies suggesting good demand. That is what you need to see for a substantial rally back up to some key levels here on Bitcoin. Without that, we could be seeing more pain. If we get poor company earnings, if we get a 100 basis point increase in interest rates, if we get officially declined into a recession on Thursday, we could be seeing these lower prices. So we need to be very, very cognizant of that. Now, if you're not sure about some of these data points that I'm talking about and what it means and some of the details behind it, which I've already gone through, including the projections for GDP, including the projections for what's been priced in terms of the Fed rate monitor tool for the interest rate hikes, go and catch up on a couple of my videos from yesterday where all of that will be explained for you guys. Now, one more thing which I shared on Twitter yesterday night is this. The White House shared this over the last kind of 24 hours or so, and now they're starting to play around with the definition of what a recession is. Now, we know that the technical recession that everybody uses for a recession is 2 negative quarters consecutively of GDP. Right? But now they're saying, oh, what is a recession? While some maintain that 2 consecutive quarters of falling real GDP constitute a recession, that is neither the official definition nor the way economics evaluate the state of the business cycle. And this is technically correct. So everybody uses that as a definition. But in the US, there is some National Economic Bureau of 8 kind of panel members who sit down and decide whether we're in an economically declared recession. So the White House are playing semantics, which gets me to starting to think that maybe they've seen the data. Well, they obviously seen the data, but maybe they're preparing us / setting the scene for potentially a nasty little reading on Thursday. So these are the kind of things we need to read into when we're trying to preempt the market. That's what we're looking at. Altcoins continue to tumble here this morning. Yesterday was quite a bad day for many of the altcoins. The market down 1% here on Bitcoin, and all the altcoins are kind of just primed at about 1 to 2% down today, waiting for more direction as the US markets open in a couple of hours. Always worth looking at the dollar index to see what is happening on the dollar index. And the dollar index seems primed for a green day today, which is very interesting. Remember, if dollar index starts to bounce from here, which is where it's at, it's now come to its EMA ribbon. Remember, Bitcoin enjoyed a rally during this period. Will it now go for that move, in which case Bitcoin could see a move to the downside if the dollar index wants to start rallying? Remember, the dollar index does really well in times of uncertainty or fears of global recession. So we need to keep an eye on that going into some of these key pieces of data. Now, the next bit I wanted to share with you was this, because the European markets are not opening up too great, right? You've got the DAX down 0.3, the CAC down flat, and the FTSE medium-sized businesses down 0.5, but the main FTSE up 0.75. And the main reason for this is Gazprom has restricted some of the gas flows, okay, from Russia, the natural gas flows from Russia to Germany, okay? So that's a bit of a worry here. Pre-market in the US looking red-ish, I mean, but still flat, 0.36, 0.25, and 0.31. And they're going to have to keep an eye on the key data that comes out. Remember, it starts off with the earnings in a couple of hours from UPS, Coca-Cola, GM, McDonald's. That's going to have a lot of data in there around how is the economy feeling, particularly with UPS. You can see a lot from logistic companies. Are they delivering goods? Are people ordering goods? Or is it slowing down, right? That's a lead measure that allows us to understand if companies are moving in the right direction. So big day today. No doubt I'll update you again later on today once we have a little bit more direction. But that is what the scene is right now. We're back in this bear flag. This bear flag does come with a price target of breaking down to the downside, and we need to be very cognizant of that. I don't want you guys to ignore the fact that we are back in the controls of the bears. We had a brief couple of days of green here where we broke to the upside and we had some control in a bullish movement, but then that head and shoulders, just like we predicted, played out very, very quickly, and it just took the bears about 3 days there, 1, 2, 3, 4 days or so to get us back to parity, and then the next 2 days to throw us back into this pattern here from our bear flag. So stay safe out there, guys. Be careful with any of the trading you're doing in such a volatile market. If you have any questions, feel free to hit me up in the Discord, completely free. Make sure you're on our Telegram. Make sure you're on all my social handles so you don't miss any updates during volatile days. Go check out the free PDF e-guide I created. That's like a cheat guide with all the signs of fundamental analysis that I use when I'm analyzing a project. So when a new project has come on my desk or I want to research a new project, that's the cheat sheet guide I use to go through, make sure I haven't missed any analysis. So get that for completely free. Links in the description. Don't forget to check out BitGet and BYBIT. Links in the description. Go watch this video here, and I'll see you in the next one.